Hey yo, what's up everybody? Just doing another video for YouTube right here. While I'm streaming, by the way. So I want to talk about liquidation on Coinank, and this is ETH 1 hour. Let's quick look on it. So at this point, you could see that there are multiple lines. These are all liquidation levels. We got a green one, we got a blue one, and a blue one, and then a couple of purples, right? So now if you go on the liquidation levels and you press on settings, it will tell you high leverage are red and green. So if we're talking about shorts, those green ones are high leverage, blue ones are mid, shorts uh, for low leverage is purple, right? So now what this means, so the lower the leverage, the more the market maker is going to get paid, right? Because when you're going when you're doing like a, let's say I'm about to do one BTC long, right? Uh, if I do with 100x, okay, or 200x, the highest leverage, I have to pay less from my pocket, okay, to reach to that one BTC, right? The rest of it's going to be the leverage money that I borrowed from the exchange, or basically the market maker. Exchange doesn't have any money. Some of them has, but a lot of them are running by different market makers. They provide them money. So when the market maker is going to liquidate these kind of people, the 100x's are the ones that has the least amount of money from themselves into the trade and the most amount of money from the market maker. So it doesn't really mean big for the market maker, right? When it's hitting these kind of green liquidations. Why? Because most he's just getting, back his own money, right? So if it's like an $800,000 position, maybe $200,000 is from the trader, and the rest 600,000 is for the market maker. So not much profit there, right? But when it hits the medium or the low leverage ones, are the ones that has the most amount of profit for the market maker or for the exchange, because when you're doing a 20x, you can pay way more. Basically, you're making your money 20x, right? Instead of 200x. So, yes, that would basically make your liquidation way lower if you're longing, hypothetically, and that's another scenario. We don't want to dive into that. But when the market maker hits, these are the big chunk of money that he's yapping from the trader themselves, and it's not his money. So that's why these areas are the most interesting areas, and sometimes it takes time for the market to go to these areas. And how and why, that's another different video. Depends on the source, depends on how many high leverage, new traders, new orders, all of that. But yeah, just want to mention this, that this is how you read the liquidation levels. So the green ones really doesn't matter, but yes, you do liquidate these green ones, you will have a reaction. But I think the bigger reactions come when you hit these levels, which are low leverage but big chunk of money in there. Okay, and that's it. Thank you guys for watching. Stay safe, stay green. Until next time, peace out.